Okay then everyone, let's continue with this second part of double tops and double bottoms, also called M and W. I hope you watched the first video where I describe where this pattern can happen, how they can happen, and now I will tell you some more variations. First of all, you can put a line chart to recognize some of them, if it is a double top or double bottoms, like this here, or this here, for example, or otherwise you just switch to the candle chart. So we can see here that there is one that forms like that, for example. Okay, call this double top, and I said last time that it could be extended or overextended. I'll get there in a minute. And then what we can see, all right, let's take the easy one for now. For example, let's get this one in the middle, since the trend is switching here to downtrend. Let's get this other one, which is double bottom. Okay, and then obviously, actually, let's go to another chart. Should be one here, but let's switch to the chart and I will show you some more. And here we are. We got one more here. We got this strong impulse up and then down, up and down. And as I said last time, guys, I will show in a minute a little draw of what I mean by that when it is extended or overextended. Normally with the double top you would expect a move up to the neckline. In this case we mark the neckline as this point. Okay, it's more like an area, right? So when it is strong move down, then the price doesn't really get that neckline, but it just goes around that area. Okay, so that's what I mean when it is overextended. So again, we can see a small one here. Let me see, move down, up, down, up. Those wicks, of course, they do matter. If you look at the smaller time frames, then you will see that the retrace down. Okay, and we could call this the neckline as well. Then again, there's another difference here. Actually, let's remove this because actually I will show you something else, guys. For example, if you take the line chart, this type of pattern is not really a double bottom with the same candle color. Okay, it's a kind of triple bottom or an irregular form, and with this kind of pattern there is also a good probability, because we would say that the neckline could be around here, or if you don't want to put really a straight line, then it's more like an area. Okay, guys, you will see that the does like that, and then the price tend to go back down. Okay, now let me remind you about these irregular forms that I've told you about, and that's what I meant by that, guys. Okay, so these are like equal or bent asymmetric double top or double bottom shapes. Okay, they look like M and W, right? So sometimes makes high high and high low, and then makes a high high. Some other times makes high high, high low, and then lower high, and then it goes down. And same thing here. Okay, low, lower high, lower low, and here lower low, lower high, higher low, and then it goes up. So generally with the M pattern we expect a retrace to the neckline, and with the W pattern we expect a retrace back down to the neckline, which would be here. Let me show you the other draw, what I mean by extended and overextended. There we are. Okay, so here is what I meant by that, right? So when you got an M pattern, let's say that you would expect possible probability move to the neckline on the way up, all right? But if it is overextended, all right, let's say that it was having move up here and then here retrace, previous swing low and then high again, we would see that if the move is overextended from the neckline, which is this one, okay, which is this one in this case, then the retrace probably will not be up to here, probably will be up to here, where there is where another structure would be formed, or slightly above, right? And the same thing would be for the W pattern, right? So there will be this will be the neckline, possible move expected here to the neckline in normal regular conditions. But if it is overextended and is past this structure point, then probably the retrace would not be here, it would be around here or around here. All right. At the same time, I will show you later how you could put a Fibo from here to here, and generally should have a retrace between 50% or 38.2% of the Fibonacci. And the same thing would be here. If you put the Fibo from here to here, let's do practical example. All right, so there should be a retrace from here to here, right? And the same thing will be there. Okay, I have on this Fibo, so it was not clear. All right, so let's see now how we could take an entry on a double top and bottom. For example, for a double top, we see something here, all right, in this shape here. All right, guys, you see this is possibly double top. Okay, possibly. I'm just saying because obviously I've seen it before. This is just to show what can happen, what dynamic can happen. We see a strong move down. Okay, so I've marked already the neckline. How do we know that we have to possibly expect a move up? By the way, guys, I use the MACD. I used to use the RSI, but I've seen the MACD is easier for the job that I have to do. So we see that the pair continues to go down. There is no point doing anything at the moment, and suddenly we start to see a candle up. All right. By the way, this could be a strong move down because could be a slingshot on the way down. Okay, impulse, retrace, and impulse, possibly. All right, but we don't know because based on what is happening, and now the pair looks like it's switching direction, we want to see at least a move back up. So we would go on the H4, but if you go on the H4, it's a bit difficult if you are doing trading, if you are trading on the daily to see the swings. So obviously you will switch to a lower time frame and see what's going on here, right? So at this point I would expect a move back to the neckline because of the double top, the M pattern that we got. So we see what happens. Generally you can get a clue by the structure of what it's doing to take an entry, but I normally pay attention to the MACD and see when it gets above the green line here, and then I wait for a retrace. Okay, guys, so you'll have to see. Sometimes you will see that this is a structure forming. Now as we proceed, for example, we could see that MACD is on a green line, for example. So after this does a green line, what you do, you would probably see that this one was right, made this structure, and now this, so this what was resistance here is turning support, right? So you would see something like this. Okay, something like this, just an area. All right, and then let's remove that. At this point I could put, sorry, that was the one, I could try to put on a retrace with a target there, possibly try to take an entry around this area. So since the MACD is up, I want to wait for a retrace down. This is a general rule for all the MACD lovers and for those who use the MACD. So I would wait for a retrace, and meanwhile I've calculated everything, that's right, and I got filled at that point. Probably when he retrace back, when he goes down, a retrace back down, I would decide to move my stop loss to 75% or even break even. And then what you do at this point is forming a V reversal pattern, which I like. And normally with V reversal pattern I would get also you could get also an entry here if you just missed it and you couldn't take it. And what you do, proceeds and eventually gets there. Now obviously when I do backtest, sometimes I'm so curious, I would like to see where the pair is going, but there is no point seeing that because I have reached the target. Okay, guys, so in the next video let me show you some more variations, and let me give you some more details some more patterns for you everyone, guys, and I will show you how to trade a double bottom. Thank you for now and take care.